Joining us this morning with more on that note is, in fact, Citi's global chief economist, Nathan Sheets. Nathan, it's great to have you. Walk us through what led you to this call and how much of a turn is it in your overall view?
Well, we are seeing an extraordinarily resilient global economy. You kind of think about the shocks that we've seen over the last several years and the fact that growth is still positive and the consumer, as you highlighted, is still spending. We're seeing that in China. We're seeing that in the euro area, where the economy is stagnating, but we're not seeing a euro area recession like we expected. And we're seeing that in a major way in the recent U.S. data. And I think that the strength in the global economy is really now passed from the goods sectors into the services sectors. And consumers are hungry for those services experiences that they weren't able to have. During the pandemic, they have pent-up savings and the consumer is spending. I think that's all the good news. The challenge is that it means that there's likely to be continued momentum in inflation and that central banks are going to have to stay active for quite some time yet to come.
Sarah, it kind of reminds me of the interview you did with Jane Fraser in Davos probably a year ago, which I would argue is a lot darker than the note we're getting from Nathan right now.
Right. We're worried about
global growth.
Global growth. Yeah. I guess, Nathan, the pushback that I have on all of this is, look, the yield curve is inverted the most since, 40 years. And the Fed has done the most tightening we've seen since the 1970s. And if you add those two things up, are you really sure we can get away with a soft landing?
I think this is the central question that we struggle with in the outlook. And it really has to do with how does monetary policy influence the economy? What are those channels through which it slows spending and growth? Our sense is that the Fed has done a lot, that the full effects have not yet been felt, and that over the next few quarters, as they come through, there will be a recession in the United States, and there are likely to be downturns at various times and various trajectories in other countries as well. But nevertheless, it's kind of a balance between that tightness of monetary policy and that transmission, and then this underlying resilience that I've described. And you kind of put those things together, it makes us feel like, yeah, there's going to be a landing, but it's not going to be as hard as what we feared a year or so ago.
How much of this is pinned to China and even some of the clarity we're getting now about their ability to adapt to a post-COVID world?
China's reopening, which to date looks like it's been quite successful, is indeed a positive factor for the global economy and global markets. We marked up our Chinese growth forecast this year from 5.3% to 5.7%. Now, like in the United States and Europe, we expect it to be led by consumer spending on services. And so the spillovers to the rest of the world won't be as intense as been in the case in the past with China recoveries. But nevertheless, the global economy is in a much better place, having China grow at almost 6% this year as opposed to 3% last year. It's clearly a positive.